Oh, Charles is here. Oh, wait. Oh, crap. Okay, let's see. Oh, man. Okay. Let me see. Okay, Charles is here, guys. Give me a second. Oh, man. Hey, Charles. Hold on. I think your mic is off.
Hey, can you hear me?
Yes, I can hear you, Charles.
I'm
I was
so
keeping
sorry
the.
about the mix-up. I was off by an hour, and I just noticed that we had the interview, and I'm 30 minutes late. I feel so terrible about that.
No, don't worry. I was just worried that yeah, because of the time difference and all. The stream has been waiting for you. So it's okay. Half an hour late is still better than not being in at all, right? So
Okay, well,
it's
we're gonna have to make this like an extra special interview, just because everybody waited so long. I apologize, everyone.
No worries, no worries. Well, Charles, thank you so much for attending the Crypto Grinders interview. I think the stream is very, very excited to have you finally here. And as I mentioned, if you're finally able to skip past and watch this interview, you just have to skip 30 minutes of it and then we can start. So, just a very brief introduction on who Charles is. Charles is basically the CEO and founder of IOHK, and at the same time, he is, of course, one of the lead project developers for Cardano, which is doing very, very well, top 5 in terms of the cryptocurrency markets at the moment.
Yeah, but
Currently having
nothing is doing well in the markets at the moment.
well, hey, it's well, we have to have this correction, right, Charles? If we
Right.
didn't have, yeah, we have to have it, man. I mean, look, when you saw Bitcoin at 20,000, I mean, like, yeah, I think we it was yeah. So that being said, right? I mean, I have so many questions for you. So, but before we go into the questions about Cardano, maybe you would like to tell the stream a little bit about yourself, and then we can go into the questions about Cardano. And I think everyone's going to be very, very excited.
Right. Well, it depends on how you look at the markets. I've been in this space since 2011, off and on. So, at that time, we would have died to have $8,000 Bitcoin. We were like, that was a fantasy. Now everybody's panicking, right? Okay, so let me introduce myself. I started not with any intention of being in the cryptocurrency space. I wanted to be a mathematician. In fact, I originally wanted to be a doctor. My dad's a doctor, and my grandfather was a doctor, and my brother's a doctor. So everybody was a doctor in my family, and I was supposed to go and do that. I had very strong familial pressure along those lines, but I was the crazy one, so I became a mathematician. And I thought I was going to be a professor and study analytic number theory and do that whole thing. But I was always more interested in industrial things and finance and politics and life in general. So the lifestyle of an academic wasn't quite for me, but I was trying to figure out what I wanted to do. And so right when I was leaving that field, cryptocurrencies came around and they started becoming prominent. And so I decided that I would do something in that space for fun until I found something better in my life to go ahead and do. So in 2013, I created a bunch of educational content, and I started a project called the BEP, the Bitcoin Education Project, where basically I said, hey, if you care about Bitcoin, the only way we're ever going to get a lot of people into Bitcoin, and at that time, a lot of people was like a few thousand, maybe 100,000 or something like that, was if we created a lot of good educational content to bring in the people. So we put it on YouTube, we would put the content on, Udemy and other channels, and it would just be all free, and anybody who wanted to watch it could. And we talk about everything from what is money to basically the political insights behind Bitcoin. So I created the flagship course called Bitcoin, or How I Learned to Stop Worrying and Love Crypto. And I ended up getting about 70,000 students, which was just incredible for me at the time. And I personally got over 5,000 emails. So I answered every single one of them. I said, hey, what's your question? Who are you? What are you doing? A lot of emails were, Bitcoin's really cool. How do I get involved? How do I do more? But then I was tremendously fortunate to actually meet a person named Li Xiaolao through that process. And Li is from China. And Li said, hey, I like the cut of your jib. I want to give you some money to start a business. I said, okay, this sounds a lot like a Nigerian prince scam to me, man. I don't know about that. And he said, give me a Bitcoin address. So I gave him one, and then he sent me way too much Bitcoin, and he said, "Here's your VC, go start a business." And I was like, "Okay, I can't really send it back, so we gotta kind of figure this one out." So we actually got serious about it, and I ended up starting Invictus Innovations on the back of that. What I did is I went to Bitcoin Talk and I posted a thread called Project Invictus, and I said, what can we do to make Bitcoin invincible? What can we do to make it undefeatable? And we decided to do a project involving decentralized exchange and value stable currencies. And that's basically what got me started in the space. I met a lot of people. Dan Larimer and I were partners. Dan went on to do Steam and EOS and all these other things. And I went on to my next project after BitShares was, my time in BitShares is over. And that project was called Ethereum. A small project, you know, if some people know.
Yeah.
So,
only the second largest in terms of market cap, right?
You're right.
Yeah.
But
nothing
again,
much.
it had very humble origins. Like I didn't really expect anything of it. Well, what we were just trying to do is build a better Bitcoin. It was no coincidence that Vitalik started as a color coins and a master coin developer. And what he was trying to do is add some capabilities to Bitcoin and that it didn't have, like make it easy to issue an asset or make certain types of transactions a little faster or a little bit simpler to program. And that was super hard. And he's like, it shouldn't be hard. This should be like writing a web application. It should be easy. We need to have JavaScript for the blockchain. So conceptually, he had this idea out of frustration. And I kind of helped him structure a lot of it and bring up the right people and get the right legal structure, like the choice to go to Switzerland and other such things are some of my contributions to the project. And then they raised a bunch of money and went and created Ethereum, and good for them. So after my time in Ethereum expired, I was kind of left with a quandary. Like, do I continue being in the cryptocurrency space? I'd been in now for a few years, and I got through a lot of ups and a lot of downs, a lot of stress. Or do I go back into mathematics and actually say, oh, that was a fun diversion. Okay, now I have to go get serious. My mother started yelling at me. We all know how the mother's like, get a real job, get a real life happens, right? So I took about 6 months off, and then I just felt like there was something more I could do, something more I could contribute. And I said, all right, I'll do one more thing. I'll start a company where I marry two things that I'm very interested in. One is research. I love doing it. It's a heck of a lot of fun. Don't really like the university culture too much. It's very bureaucratic and backbitey, but research is fun. It's a really good thing to do. But I also love engineering. I love building things, and I really love functional programming and formal methods. And you never get to do that in practice. That's always like out in the distance, and it's fun stuff, but it's not practical for a variety of reasons. So I said, it'd be so much fun to create a company that does research and it does engineering and marry these two things together in just the right way so that you actually build really cool cryptocurrencies and really cool protocols for cryptocurrencies. And these protocols, once you write them, won't fail because they're written the same way you'd write software for NASA or software for Boeing or something like that. So that was the idea for IOHK. And basically, it's just me and my co-founder, Jeremy Wood, and I. We started in February of 2015. We did it in Asia because he lives in Japan, and we felt the future of finance would be in Japan. And we literally designed the entire company on a napkin in Osaka, Japan. We were in this small diner called Royal Host, and we were going back and forth about how should we do things. And then we said, okay. And once we figured it all out, we went to Spa World, and that's basically the beginning of IOHK. And now we have 100 people. We operate in 10 countries. We work on Cardano, Ethereum Classic, Zencash. We have a few projects we haven't announced. We do government contracting, for example. We have a NSA grant from the EU to do software updates with Guard Time and IBM. And there's just a bunch of things that our company now does. And we've been wildly successful in terms of revenue. Never had to take any venture capital, and we're 100% project driven. So when we take a project, we grow around that project. So all those people we have do stuff, and it's just humbling and overwhelming to see that kind of growth, and it's quite a bit of fun.
I think what you just highlighted was so important that a lot of people don't understand, especially when they're investing in an ICO, right? As you can see, there are so many ICOs, so many smart contract platforms that are being built every day, right? Every country is kind of wanting to have their own. And I think they are also, they are definitely wanting to be the next Ethereum. right? And or they want to have at least that opportunity to kind of be able to have these decentralized applications be built on top, and they're forming the partnerships and whatnot. So I think right now there's so many platforms out there. We are trying to, I mean, okay, as for the channel for Crypto Grinders, we are a large part, we are all investors, right? Because my background was a large part in banking and finance. So we are trying to find a way to distinguish this monetization of blockchain. And you kind of mentioned that there's already existing revenue that are coming from the projects that you never had to tap into the VC money, because right now every single thing, in my opinion, could potentially be 90% a cash grab. And because the cryptocurrency markets, and with cheap money that has been floating around in from of course the Fed's having the quantitative easing for so long, there's all this money that's floating around and just dying to get into something that could provide a better return compared to the stock markets, the futures markets and whatnot. And this space is the perfect instrument. But I'm just very concerned that most of these projects won't deliver, which I'm pretty certain they won't. And a large part is just that they're just buying time, because being that you can be so well capitalized so early, especially during an ICO period, a lot of these projects will just basically buy time until people forget about them. And that's why we kind of want to follow the leaders in the space. So, Cardano, ETC, like I personally was invested in ETC way back because you were in it. Not that I knew every single. Yeah, I'm serious. You can watch any of my videos from the very beginning. I said, look, if Ethereum can be at this current price point with this kind of infrastructure, it was very new back then. That was back in 2016, and we have ETC that kind of forked, right, because of the DAO hack, right? And then from then, because of that, you decided to fork, and that's when you form ETC. So to me, I'm thinking, okay, this is the space where everyone can have a kind of say. There's that financial inclusion. So I'm now wanting to understand a little bit more about your direction, right? Because you are having all these contracts that are coming in. What is the deciding factor for partnerships these days? What makes a company or an enterprise decide to build on a particular blockchain?
Well, that's a pretty big question. There's a lot to it. So let's kind of unpack that a little bit.
Let's deconstruct it.
The first part was the viability of this business model in general, or these protocols in general. And the question is, will these protocols survive, or will there be a mass consolidation? With all new industries, when you create a new capability, what people are able to do is they're able to connect the dots in terms of the big value. So, for example, when the internet came out, we said, this will completely change commerce. So e-commerce, this will change the way we interact and socialize with each other. So this idea of social networks. Eventually, computing will go mobile, and that will change everything. So people can connect dots at the high conceptual level. But then when you get into the nitty-gritty of who has the best approach to actually execute and deliver these types of things, for every eBay, there were 100 startups. And for every Amazon, there were 100 startups. And you give them some money and they go about and they succeed or fail. And there's a mass consolidation. And eventually one or two of these models, maybe a handful, but certainly not 1,000, succeed. And that becomes the dominant market player. So eventually the Yahoos, the Googles, the Facebooks, and so forth settle. Now, cryptocurrencies are no different, with just one distinct, unique part of it, which is that they're being funded at a level above and beyond what you would expect to fund a startup. So generally, you get resources in stages. You get a seed stage, you get a Series A and a Series B and a Series C and so forth. And every one of these stages is tied to minimum viable products development, market adoption. It's tied to checkpoints and milestones, effectively. Like, did you manage to actually take your vision, your grand plan to conquer the world, and turn it into something real? And you've actually shown it to real people, and they've used it, and they've provided you feedback. So there's this series of trials and tribulations that you generally go through with a startup. Now, if you get to the Series C or Series D phase, so that basically means you're getting funded $50 million, $100 million, $200 million or more. The assumption is that you already have a fully working product, or you already have something deployed in market. You already have proven properties of this product that is competitive. you have a board, you have a CFO, you have a lot of adult supervision. You've been in market for maybe as a company 5 years or 6 years. You've shown you know how to hire people, how to fire people. You probably already had that fight in the rain with your co-founder. You might have been through a divorce or two. You've already gotten beaten up a bit. So I, as an investor, if I was investing in something at a Series C or Series D level, I'm more talking about exit strategy. I'm talking about, are you going to get acquired and bought by Google, or are you going to go do an IPO? But it's not a viability question. It's more of a direction question. And there's structural things that need to happen to get you to that next level. But the basic stuff is already proven and done. But in the cryptocurrency space, what we do is we say, set all that aside. We're just going to start at the Series D level and give you all this money. And so you have to somehow figure out how to go through the angel stage A, B, and C, and do that on a very compressed timescale. Oh, and by the way, it's almost as if you've already IPO'd. And this stuff is trading on market. It's a highly speculative market. So the prices go way up, they go way down. And so there's great fortunes to make, but there's great fortunes to lose. And unfortunately, the people who tend to lose in these types of markets tend to be retail investors, almost certainly. Because they don't really know what they're doing. They just see everybody's making money. So they just jump onto whatever has their favorite branding and marketing, and people tend to tailor to that. So if you are to look underneath the hood and actually say, what has substance as a cryptocurrency, then beyond just the fact that conceptually it has to make sense to you, you have to ask yourself, what does the team look like? What's their background and their experience? What have they done so far? How are they executing? How are they being held accountable for the project that they're working on? How fast are they moving? Can they hire people successfully and navigate that space? Can they deal with adversity and crisis? Can they, for example, if one of the co-founders was to die, would the project still be around? If you actually start getting into that kind of nitty-gritty detail, the things that should have been done if you're going through traditional capital markets, what you'll find is the vast majority of projects in space don't measure up, and they just simply don't survive. Now, to be fair, Ethereum at a time would have not survived that test. Just the reality, right? To be fair to Ethereum, though, they didn't raise $1 billion like certain ICOs. They raised 18 million. So it was a bit more conservative, but at the time it was the largest ever. So that's kind of the first thing you have to do, is just basically put your VC cap on and quickly go through that analysis and figure these things out. Now, at the end of the day, where does the value come from? If the value for your investment or the value for your participation in systems comes from the next guy who buys the token from you, that's called a Ponzi scheme. And guess what? Those never sustain themselves. You can get really rich off of them if you get in early and you're clever about it, but it's not ethical. And these things are banned for good reasons in almost all developed countries, because they always end up hurting the most vulnerable and the least capable of us. So the value has to come from the fact that somebody's consuming the token for something other than speculation. Either they're using it to buy ads, maybe they're using it to gamble, maybe they're using it for disk storage, maybe they're using to buy computation, like with the Ethereum model and so forth. And then you can ask yourself, will the demand for that product grow such that this token will be more valuable relative to supply? Okay. But if you can't do that analysis and you can't see where a person is buying that token other than the fact that that the token is speculative, almost certainly you're in the wrong product. Okay, that's why the Bitcoin people were so obsessed and have been obsessed with turning Bitcoin into a proper payment system and actually having a closed economy where you can buy products and services for Bitcoin, because they say, hey, if you have a Bitcoin, your value is proportional to the total amount of merchants, and value is proportional to the total amount of services that are accepting this token. So you can stay at hotels with it, you can get massages with it, you can buy alpaca socks with it, et cetera, et cetera. And the more of that you have relative to supply, the more valuable Bitcoin becomes. This is not because there's a new wave of retail investors coming in to make it more valuable. It's just the fact that you can do more with it, right? So that's kind of the fundamental story I give everybody is first understand that these markets from a capital markets perspective aren't working properly. They're very irrational. As we've seen today, they can go down 30% a drop of news. So they're subject to manipulation and black swan events. So it's very difficult to actually build fundamental models and even do proper technical analysis in these types of systems. And then second, if you don't understand where the utility comes from and what will drive growth and value for your system, then you're probably going to lose your money because you're probably buying into something that doesn't have that. All right. So let's look at two examples. One is Steem and one is Cardano. Steem is one of those examples where if Ned just tweaks the model a little bit, I think that Steem is actually a sustainable cryptocurrency. So Steem has a pretty good idea. You have content production, content consumption. Not hard to understand. And usually there's some middleman that lives in between, whether that be Facebook or Reddit or YouTube, whatever that happens to be. And that middleman survives by connecting the two via ads, these types of things. Okay, and that's an understood business model. And that middleman right now gets all the ad money and maybe gives a little bit of it to the YouTube guys. And Facebook gives a little bit of it to people monetize that way or whatever. Okay, so what Steem is saying is cut out the middleman, and we're going to pay our content creators some token for construction of content, and the community will have some sort of method of deciding who's created valuable content and who hasn't created valuable content. So you've gotten one side of the equation pretty sensibly figured out, that you print money, you give that money to certain people, and based upon merit, based upon what they've done for the system. Now, if they're doing a good job, they create a lot of great content. Okay, so the system becomes very valuable, brings lots of people in. The problem is that there's no reason at the moment to buy the Steem token outside of speculation. There's no model for that, right? So you have one side figured out, but the other side is flapping in the wind. And that's why Steem has really not grown and really truly competed with Facebook. But if you were to add an ad model into Steem, then all of a sudden now you're talking about a different proposition, because you're saying, okay, I have a reason to buy the token and I don't really care about speculation or what the price of the token is. I am just saying I need to use this token to do something like show you my product. I have this great new course I want to sell. So I'm going to buy an ad so that ad appears on your blog, which is powered by Steem, right? So now you have a closed economy where the token has a reason to be purchased irrespective of the speculative component of it. So if they were just close that model off somehow, Steem, I think, would be a viable economy. It would be a sensible economy for people to invest in. And then it's just a question of, will the network effect of this thing grow? And the value of the token is basically just proportional to the people within the system, the quality of the content, and the velocity of growth. Okay. Now, Cardano is a bit more complex, because what we're trying to do with Cardano is not look at a single application, which is how do I incentivize content creation and potentially consumption for ads. What we're trying to do is actually create a base financial protocol that is a drop-in replacement for the entire banking system of a country. Okay, that's a bit more ambitious. So basically what that means is if we pull it off, we could have something that could grow to 3-4 billion users all throughout Africa, South America, Asia. And you're now talking about things like lending and remittances, and you're talking about basically insurance and all these complex financial products in tandem with the tokenization of natural resources, in tandem with value stable currencies, in tandem with capital markets that trade, and a litany of other things. So Cardano is a collection of protocols that we're developing that, once we finish that job, will allow you to do all of that stuff on top of it. So Ethereum is kind of the closest thing in that respect. It's trying to be a world computer. And if they do their job correctly, you should be able to replicate a lot of these types of services and features using smart contracts. And it's a somewhat similar model for us. We just have a different vision of what are the building blocks that are required to get there, and how do we get these systems to work at scale. So it's an Ethereum scale project. But what that also means is that we have an enormous execution risk. There's a lot that can go wrong. It means that we have to be very strategic about how we go about adoption. It means that we have to get these things to work well on a cell phone. It also means we have to solve many problems all at the same time. This is not just a game of pick your favorite DAG thing like Hashgraph and Tangle and get 10,000 TPS or 100,000 TPS and suddenly it's done. This is also a game of how do you create an identity that lives in a blockchain? And then how can you build a meaningful reputation from that identity? It's a game of how do you construct a value stable currency? How do you do proper asset representation? There's ERC20. Is that the end all be all, or there are different ways to do asset representations? How do you build marketplaces once you have these foundational components, these building blocks inside your system? And again, how do you get all these things to be easy and accessible? And in some cases, even work offline. So you can do offline, off-chain payments in your system. So what we've done is we've staffed up for all these different layers and all these different ideas. We've built a collection of small teams around each and every concept. Right now, we're working on bedrock, so the infrastructure protocols. And then over time, we'll pivot and start working on the layer 2 and layer 3 applications after the bedrock is done the way we think it ought to be done. And it's not just IOHK, there's also the Cardano Foundation that kind of looks at the direction of where we need to go in terms of banking and finance and regulation and sociological things. That's why they have their research agenda with ZN. And there's Emergo that's looking at how do we create network effect and bring people in, have dApps constructed and so forth. And then IOHK, in addition to doing all the protocol stuff, we also have a very solid education group within the company that actually goes to countries like Greece and right now Barbados and soon Africa and trains people how to be developers. And soon that development training will include how to write smart contracts in our system. And literally, we're going to train thousands of people in Ethiopia, Ghana, and other places on being developers within our system. So as those capabilities of the system increase, now we have a new wave of people who can utilize that. So there's a VC component in this, in addition to an education component. So it's just a damn gargantuan project. And we've been working on it for years, years more to come. There's so much stuff to it. And so it's hard to manage, and it's definitely a big thing in my life. I travel about 200 days a year, 250 days a year. I've gone to nearly 40 countries since I started the Cardano project, since IOHK started its participation in the Cardano project. And I'll probably go to another 40. In fact, I'm planning on going to Africa this year, most likely this month or next month, as well as Kyrgyzstan and probably Vietnam and probably South Korea and many, many other places, just to keep the momentum going and to keep recruiting and to keep growing and so forth. So that's my view of these things in a nutshell. Is start from historical analogy and look what these things look like. So the internet is the closest example to it. Understand where real value comes from. Put your VC hat on and try to understand things. And if they don't make sense, well, then don't buy anything. And then know what you're getting yourself into, and also know your time horizons. Projects like Ethereum, Cardano, Bitcoin, even Bitcoin, which is much simpler, it's trying to be a digital commodity. These things literally take years to decades to reach their natural conclusion. So if your time horizon is weeks to months, then you probably shouldn't be involved in these types of things. You should go and do something else, that's a bit more meaningful. And the last point is there's no free lunch. Be enormously suspicious of anyone who claims stuff is free. BitConnect is an example of that. Any system that says free transactions is an example of that. If somebody can promise you a guaranteed revenue stream that is just unbelievably generous, and if somebody says that you're now doing something and you're doing it for free, and it's not clear who's actually paying that cost, it is a scam. You will lose your money. Don't do it.
I think this space is extremely interesting, and what of course first got me into it was naturally the growth. I think everyone is here because of the growth, because sadly to say that 90% of the population still does not understand this space. It's the top 1%, which is people like yourself who have been coding for so long or just so connected that you all understand what it takes, right? That's why I noticed that after conducting so many interviews, the team is never concerned about the price. And you guys are focused on just developing the infrastructure, establishing the partnerships, and making sure that everything works. And this is something that I really respect. And especially the ones who have been in the space the longest are the ones that really value the vision. They value the vision the most, and they're working the hardest. Now, everything else, which is from 2017 onwards, is to me just a whole lot of a mess. And because of that, right, we are always wanting to make sure that we find the right people to come onto the show. So right now, Charles, I just wanted to ask you, with regards to if you were to change, if you had some control over Bitcoin, what is Bitcoin lacking at the moment, or what's the right direction that Bitcoin is supposed to go in terms of scalability?
Right. So Bitcoin needs to decide what it wants to be when it grows up. And the problem is the founder didn't leave a manifesto. And so everybody decided when they came on board to speak on behalf of Bitcoin and say, this is what Bitcoin needs to be. So is Bitcoin going to be a world computer? Is it a drop-in replacement for the financial system? Is it a commodity? each and every one of these things can be done. Like, for example, we say Cardano is the world, the drop-in replacement for the financial stack for 3 billion people who don't have one. So that's my mandate. So now I go and fight in that design space. So that's one of the reasons why these things are so contentious with Bitcoin, is that because we haven't, as a community, come to a consensus of what the philosophy ought to be, we don't really know what is a legitimate upgrade versus an illegitimate upgrade. And then everybody has their own opinion about it. And then eventually it creates factions. And then it just becomes a situation of which faction is more powerful. And so what we saw is two major factions formed. One was the Bitcoin Cash group, and one was the Bitcoin Core group about certain things. And Core said that Bitcoin should be slow, expensive, and secure, but then have a lot of overlay possibility, so that's where all the speed comes from. And the other group said everything needs to be endogenous. It needs to live within Bitcoin itself. And we need to just make those blocks really big and all these other things really fast. And that's how we'll scale it. It needs to always live on a blockchain. That's Satoshi's vision. Okay. And it's a gross oversimplification of the argument, but in the interest of time, that's the best we can do. All right. Well, if I was king, like, where would I take Bitcoin? I would say that Bitcoin, we owe an eternal debt of gratitude to for solving the conceptual issue of decentralized money. Basically, what Bitcoin did is that you can create something of value without having a central issuer, without having a cult of personality, without having a backer, just by having digital scarcity and proper markets and a reasonable degree of security. If you do that, people will trust it, people will buy into it, and it's just like gold in that respect. Gold is a very decentralized thing. There is no notion of the gold king, somebody who issues gold and controls gold, and he's sitting on a throne of gold and something like that. Doesn't exist. Gold is just this thing that's always been around. We kind of understand the supply dynamics. We kind of understand where the demand dynamics come from. And some days the markets are up, some days the markets are down, but gold is what it is. So if Bitcoin was just trying to emulate that and be digital gold, it's very clear to me where the path needs to go. And frankly, I think they can be quite successful. So things like MAST and simplicity and adding some sidechain support into it for interoperability, and adding Lightning to it, this makes perfect sense. And I think that if you do that, Bitcoin would be a high utility, great digital gold. So the Blockstream vision is actually quite cogent, reasonable. If you want Bitcoin to be a payment system, and you want Bitcoin to compete with PayPal and credit cards and actually become an alternative currency of a country, the problem that Bitcoin has is it's not clear, given the supply function, how Bitcoin will achieve that. Because let's say that you can get high throughput and you can get low fee transactions and you can somehow find a way to store all of that. You still have this issue where you have an economy set up where the early people basically get colossally wealthy off of the later adopters, and you have an incentive to save as an incentive to consume. And it's not clear how the price is going to equalize or normalize. Now, I've heard people like Eric Voorhees, and I like Eric, he's a good guy, say that, oh, well, once we get to a certain threshold of adoption, that somehow Bitcoin will, stabilize and you won't see a lot of volatility in the price. My counter argument to that is, name one commodity where that's happened. It's never happened for gold, where we've had this long range where gold is plus or minus 2%, and it just stays in that bound and it never goes up and it goes down. Well, guess what? If you have 10, 20% fluctuation in your underlying currency, you can't do credit. You can't do proper commerce because many merchants live with thin margins, and merchants don't want to be currency speculators. This is why countries with crummy money never get ahead, because they can't form credit markets and they can't form proper marketplaces, and they have to use borrowed other currencies to try to stabilize things, or bizarre mechanisms like capital controls to stabilize things to a point where they can at least survive, but they can't save and they can't grow. So I don't think Bitcoin, from a monetary policy standpoint, makes much sense to me as a unit of account, or a drop-in currency replacement. You need some more mojo there. Now, the problem is that's a very uncomfortable conversation, because that means you may have to change the supply function. It means you have to put in some form of a central bank component. That'll be decentralized or what, but there's something in there that you have to do to make value stability occur. But that's obviously right. That'll never happen. Monetary policy of Bitcoin is sacred. Of all things done, that's the one thing that probably will never be changed. So from my viewpoint, I think that it's probably unrealistic or reasonable to go down that road. So don't change Bitcoin to try to chase that. Just make it better digital gold. but that's my personal opinion. I'm not in the group. I was never invited to be a core developer, and all my ideas were kind of pushed away. So that's why I went into the altcoin space and helped with things like Ethereum and BitShares and now Cardano. And I'm able to innovate, permissionlessly. In fact, the core developers were very famous in saying, if you don't like what we're doing, you can always fork the protocol, which is what we effectively did. But I still love Bitcoin, and I still owe a huge debt of gratitude to that ecosystem. And I hold a lot of Bitcoin. So I believe in Bitcoin, and I love what it's done for the world. And I love the conversation that Bitcoin has started. I just hope that sensible minds can emerge out of this whole debate, and we can get to a convergence of what does Bitcoin want to be. And then once people accept that, get the right technology in place. It's much less about technology. It's now much more about philosophy and direction. And once that's resolved, it's very natural what forks need to happen and how Bitcoin needs to evolve.
Okay, so with regards to that, now, then of course we have to ask about, you building a better Ethereum, right? I think you're building a better smart contract platform, and we are moving towards the generation 3 blockchain. So that is how you have positioned Cardano. Now, could you kind of define what it really means to be a good or solid generation 3 blockchain? And what is generation 4? Because everyone knows 1 and 2. I want to know what is generation 4.
Right.
Yes.
Generation 4, right?
Yes.
I'll tell you after I buy one.
Okay.
Okay. So basically, generation 3 is saying, what did we like in Gen 1 and Gen 2? We like the whole digital scarcity thing. We like the blockchain paradigm. We like smart contracts. That's all great. But we'd like that to work at a scale of billions of people. We'd like that to be able to talk to thousands of different systems, even ones that aren't decentralized. And we'd like that to be sustainable, meaning that we have ways of evolving the protocol and ways of paying for things over time. Okay, so as with all ideas, it's like a whole bunch of people in a room, in a dark room, feeling an elephant, and somebody gets the ears, and somebody gets the trunk, and someone gets the ass. Poor person, and they're all feeling the same creature, but they think they're touching something different. And somebody turns on the light, and then you can put all the pieces together and say, this is what an elephant looks like. So it's similar in that respect. So Dash, for example, was really interested in the sustainability component. So they constructed a treasury. The same for Tezos, but they were on the other side of the elephant. And they were constructing a forking system. Then you got some people feeling the tusks, and they're saying, it's got to be scalability. We got to get a lot of TPS. And then other people like the Ripples and the Aeons of the world were saying, we need interoperability. We need to be able to talk to other systems. That's the key deciding feature. But we're all feeling the same animal. So my view of third generation is something that can balance all of these together and achieve a few characteristics. One is that as people join the system, you gain more resources. Currently, we live in a replicated system. And unfortunately, as long as we're there, we can never scale to billions of users. No matter how good our protocols are, they'll reach a maximum point and then be saturated. Just like you can fill your basement with lots of servers and get yourself a fiber optic internet connection, but if you ever get to Facebook scale, doesn't matter. Those servers are not powerful enough. So people need to bring the resources that they take. That's a fundamental characteristic of scalability. So that has to solve that way. Second, if you enter into the discussion with a one blockchain to rule them all or one paradigm to rule them all view of interoperability, you will fail. There's an internet of blockchains, there's an internet of value, and that's not going to be different, if anything, because of cultural differences. Money and markets are deeply personal. Singapore has a very different idea than China, than Japan, than Korea, than America, how these things ought to operate. So it's incredibly naive when we've created these structures this way to believe that somehow they'll all collapse and only one structure will rule them all. So instead, what you need to do is accept that you're going to have competition, just like you're going to have different languages and different religions and different cultures. And the key is translation. The key is being able to walk around and talk to all of them and do things with them in a reasonable way. So we've already seen some good progress to this. For example, what we do with our sidechains protocols and what the Interledger Committee is doing at the W3C, I think these approaches are realistic and reasonable. You just have to understand it's less of a question of can we talk to each other and more of a question of what am I giving up in terms of privacy and control over my assets as I take my great journey around different blockchains. And then finally, in terms of sustainability, this is the most difficult one because it's the most ill-defined. And also we don't have a really clear metric of success. Interoperability would be saying how many different people do I need to talk to, and how many can I currently talk to? So let's say there's 1,000 and I talk to 800. So I say 80% done. Great, I can understand that. That's a sensible thing. It's countable. The same for scalability. You say, okay, I have a property that I can chase, that when I add people, I gain resources, and as long as that's greater than or equal to the amount of people in the system will scale infinitely. BitTorrent is an example of that. So we kind of have quantitative metrics that we can sniff out and say, this is what you must do to succeed. The problem with governance is that, what is the definition of success? Like, can you point to the perfect democracy, or can you point to the perfect government structure? What does that look like? You don't have a quantitative metric saying, I'm 92% of the way to perfect voting. Instead, there are qualitative metrics like, are the people happy and wealthy? Are my people well educated? Is my suicide rate low? So what are the analogies to this in blockchain land? You say, okay, well, in blockchain land, we don't want a lot of forks. We want, or if they do happen, we want everybody to be on board with them and they're sensible. Okay, so that's a qualitative component. You want things like saying, if you have a project that is legitimately interesting as an open source project, and you want that project to get funding, that project gets funding, and you don't go to jail because you ran an ICO or something like that. That gets funded, right? Whether that be, I want to host a conference, or I want to create a new protocol, or I want to do some foundational research, there just seems to be a way to find money for that. Okay, so there's a coordination issue, there's a voting issue, and the challenge is that that room is never going to be fully illuminated. We never get to see the whole elephant there. We only get to see parts of it, but yet we still have to act as if we can see the whole creature, and we have to guess what it looks like. So what we need to do there is we need to figure out an easy way to vote. We need to create a great way of incentivizing votes, and then we need to do a series of controlled experiments that allow people to gradually learn how to vote in these types of systems. But you have some things that make this very difficult. One is that there's knowledge asymmetries. So I, for example, because of my position and because of the people I work with, I have first access to all the information in the ecosystem. And I'm a fairly well-informed person. Most people are not. So my view of things is very different than most people's view of things. So I decide things differently than most people do, just by consequence of my position and how I've chosen to spend my time. Second, you have incentive mismatches. So we have a term in economics, it's called rational ignorance, where basically the value to get informed on something is less than the knowledge of being informed on it. So the example I like to use is healthcare. In America, we have the most expensive healthcare system in the world. And if you were to ask the vast majority of people, well, why is that? What is good healthcare? The vast majority of people, including some people in the healthcare industry, won't actually be able to give you a good answer to it. Yet, every year, they vote in some way or some form on the next greatest politician. And part of his plank is the healthcare policy. So they don't have the time or desire to get informed on the issue, but they have an opinion on it, and they certainly throw their vote away. And that's called rational ignorance. It's basically you vote blind because voting informed is too expensive. Well, the cryptocurrency analogy to that is the block size issue, the SegWit issue, larger issues like the DAO issue. Some people are very well informed on these things. The vast majority probably won't be, because it takes quite a bit of time to actually understand what's going on. In some cases, you can't, because they're just too technically complicated. So you're going to be plagued with rational ignorance. And the more you get to decide on, the more democracy you inject in your system, the more difficult that becomes. So there are some suggestions about how to get around that. One is to do what's called liquid democracy or liquid feedback, a delegative democracy, where you basically say, I'm going to give my voting to somebody else who is informed for a variety of reasons. And then that person has the right incentives, the right knowledge to go and decide on my behalf. This is a solution that isn't new. It's been done for a very long time. America is built this way, and all modern democracies are built as republics for this reason, because they realize direct democracy tends to descend to mob rule. Delegative democracy, it's a liquid democracy, is about being able to do this on a facts and circumstances basis. It was a much larger degree of rapidness behind it, and also doing it at a multi-level, where, for example, you could create a voting class, and that voting class creates a representatives, and they go and do it. You can do it 2 tiers, 3 tiers, 4 tiers. So for Cardano, we're running basically a series of experiments, and we're thinking very carefully about how do we construct a voting system. The very first level of that is consensus. So we say, how do you delegate your stake to a pool, and that will represent your interest in keeping the system going. And then the next level is the treasury, and then the next level is forking the protocol. These are kind of the three foundations that you have to resolve, and every single one of them requires slightly different tools, and every single one of them requires slightly different voting schemes. And all throughout this year, next year, and the year after, we're going to be chasing that. And the frustrating thing for me as an engineer is, as I mentioned before, we don't actually know completely if we've succeeded or not, because we cannot get so granular to have quantitative metrics like 39% of people are happy. You're just not going to get that. Instead, what we're going to do is look at things like, are we having forks? Are a lot of people not getting funded? Are we less competitive than other people? Are we just not able to make decisions? Are we at a deadlock? Like, we all agree that Bitcoin has a governance problem right now. You feel it, you see it. It is allowing itself to fall behind other competitors like Ethereum, and it doesn't have a clear direction. So there's a governance problem there. But as I said, correcting that is much harder. So that's how I label the third generation. It's just like two things we understand pretty well, and they're quantitative: interoperability and scalability. One that's strictly qualitative, and we don't quite fully understand, but you need all three of them. If you pull it off, then you basically have everything you got from Ethereum and everything you got from Bitcoin, but you can run it at a scale of billions of people, and it actually can act as a full economy in some respect. It does everything from property rights to supply chain management to identity, to money, to financial markets, to other things that are non-financial that you can dream of and deploy. And it's all permissionless, and it's all transparent, and it's all auditable, and it's as low cost as possible. And there's no intermediaries that gain a lot of power, like the Ubers of the world and the Airbnbs of the world and the Facebooks of the world, who just by nature of connecting people have gotten undue influence in society.
With regards to what you just mentioned, right? Because I think you are going to be functioning a large part into the financial space as well. What are your thoughts on, and you also mentioned a lot about politics as well. So how do you find the regulations that are really clamping down hard in this space? I think it's regards to financial. So maybe you can share some insights with your thoughts.
Right. I'm a libertarian, and also I come from the cypherpunk world. And so nothing in my world makes sense when you say, hey, let's have the government come in and solve all of our problems. But the government is like the vampire. You don't get the vampire in your house because he snuck in. The vampire comes in because you invited the vampire into your house. And that's what we've done as a space. So we cannot complain that regulation is coming when things like OneCoin and BitConnect exist, and when people have gotten fabulously wealthy off of the backs of the misinformed, underinformed, or the poor. You just can't complain about that. If you buy something and that thing goes up 1,000x, you are not smart. You are lucky. Just very few people, I think, in human history who have been able to get returns like that because they're smart. James Simons is one. He's a theoretical mathematician who built mathematical models to trade with. And if you bought the Medallion Fund back in the 70s, you'd make massive sum of money. But James put together 300 of the smartest PhDs you'll ever meet in your life, and he built some of the most exotic models, and he was first to market with this type of trading strategy. And now everybody does it. And his margins went from astronomical to commodity, 10, 15%, maybe a little bit more, maybe a little less per year. So the first thing you have to accept is that there's a lot of people who got really lucky really quickly, and they got fabulously wealthy as a consequence of their luck. Then they believe that luck somehow translates to business skill, somehow translates to a moral mandate, and somehow translates to a full validation of whatever their personal philosophy happens to be. And this has permitted them to act dangerously. And when I say act dangerously, is construct structures that almost certainly have no viability, almost certainly have no probability of success. And because now they're wealthy, and because now they're powerful, they have the ability to act as a beacon to attract more people to them. And those people who show up put their money in, they put their passion in, they put their joy into these projects, only to find them blow up in their face. Now, most people aren't deeply principled, where if they fail, they say, it's completely my fault. I shouldn't have been there. I shouldn't have put my money in. They're litigious. They sue. They go to the government and complain. And so governments are creatures of reaction. So if they see lots of people losing money, they see lots of people suing, they see lots of people complaining, they will come in and do something about it. And it's exactly what's happening now. You have campaigns where people who need maybe $5-10 million to build a product are raising $1 billion. They're calling that a donation. They're using semantics like you have no rights whatsoever. You can't complain about it. And I say, oh, really? So let me see here. So that donation everybody sent to Tezos, are they also happy with Johan Gevers? Are they also happy with that whole result? Are there not 4 class action lawsuits at the moment, potentially more, depending on facts and circumstances? Why would they sue? Why would people complain? Why would they go to Reddit if the money was a donation? Wait, donation by definition says there's no strings attached. You've given your money to somebody. You have no expectation of return from that. So then why is everybody so upset? If EOS was to do the same, if Dan Larimer decided to just retire and become a Zen monk somewhere in Nepal, would everybody just be like, no, it's okay, and I'm okay with giving EOS $1 billion, that's fine? No. People are treating this like an investment, and people are treating this like something that's going to produce a return. And now you have these ventures that ought to be funded at $10 million or $15 million at the $1 billion range. That's a moral hazard. It almost certainly it will not result in a good return for people, and almost certainly the expectations are too high. No one, not Steve Jobs, not Bill Gates, not Jeff Bezos, in the history of markets should be entrusted at so young an age and in so low a skill level and in so little validation with that kind of capital. I'd feel perfectly comfortable giving Bill Gates $1 billion, because if he's asking me for it, then there's probably some reasoning behind it, and he's proven he can handle that. I wouldn't give 21-year-old Bill Gates $1 billion. Same person, different experience, different facts and circumstances. But this is what's literally happening in our space. So from one viewpoint, I think regulation is coming. It's coming by invitation. They've invited the vampire into the house, and we're now seeing the beginning of a crackdown. That's why the markets are where they're at. Almost certainly there's going to be a series of enforcements that come, regulatory enforcements from the CFTC, from the SEC, from FinCEN, from FINMA, from the FSA, from China, from South Korea. And what's going to happen is a lot of people who got very greedy and very stupid and used retail investor money inappropriately will be fined and or go to jail. And that'll be a cleansing of the markets. I've been saying this consistently for several years now. I've been on Bloomberg. I've said it to every reporter. I said, we as an industry need to do better. We need to self-regulate. We need to be rational. We need to encourage people to do things in stages. We need to think about consumer protections. Yet none of this was done. And we played the semantics game as an industry more and more and more. And now we will witness the consequences of what we've sown as an industry. Now, this in no way, in my view, invalidates the technology, and in no way says that what we've done is somehow immoral as from a blockchain perspective. All that's fine. It's so clear. Regulations come, they go, they change. But what it does mean is that the era of 1,000Xs, the era of having no product and being able to raise $1 billion is over. It's just coming to an end. And so if you're going to ask for money, it's either going to have to go through standard regulated channels like the Jobs Act or security tokens, and there's going to be specialized markets for that, and there's a much higher bar, or you're going to have to ask for a heck of a lot less. You have to be much more conservative, or you're going to have to come up with much more honest ways of doing it than the way that it's been done before. It also means that investors are going to be a heck of a lot less willing to put over their capital into these things, and you're going to have to work harder to win their faith and trust. We saw this with VCs during the internet era. There was the era of irrational exuberance, and then after the dot-com collapse, it was much harder to raise money for a startup. But rightfully so, because they were giving away money too quickly. So the pendulum swung one direction and swung way over the other direction. And that's just a natural event and order of things. I'm personally sickened, though, by some of the things I've seen in the space. I've seen exchanges say, hey, we don't give a shit if we're trading a Ponzi scheme or not, but we want a $5 million listing fee. I've seen people not really care whether the product exists or it's real, or launch a copy of a copy, and they say, oh, but don't worry, we'll be able to exit. I've seen ICOs do things like say, hey, become an advisor. We'll give you all these tokens you can sell before anybody else, or sell in the back of the crowd sale. It's just extraordinary, the things that you see when you're in my position in the space. And I go out of my way not to get involved in all of these things. So if you're in the nitty gritty of it, in the nuts and bolts of it, it's unimaginable what's probably occurring. And I think that that needs to be cleaned up. Since we, as an industry, don't seem to be able to clean it up ourselves, the governments are going to clean it up for us. And they're probably not going to be very nice about it. And they're probably not going to be very wise about it, because they historically have not been.
I think what you just mentioned really sums up so much in terms of all these ICOs that are trying to do a money grab on people. And as much as I think because we are so much with the retail investors on the ground, CG is so much always listening to what the ground has to say. It's like a different spectrum, because people are saying, you know what, this is my money. I have every right to put it out there, invest in whatever particular ICO I see fit, right? But then again, you did mention that if, like, say, for example, Tezos is now going through a class action lawsuit, all the funds are being frozen, no one is able to make any money from this, people start getting angsty, right? So it's like a chicken and egg scenario where the governments are trying to clamp down, quickly kind of tighten up so that this doesn't go blow out of proportion. Then we have the investors, the retail investors who want to participate, be part of this financial inclusion, which previously, before the whole cryptocurrency space, very few who had zero banking accounts could never even be part of such a thing. Now with the whole internet space and also with ICOs, they have a chance to kind of be able to be part of all these very, very strong, potentially very good projects. But then again, the education part is very, very little and limited at this point, right? Because this is the part where we are all struggling with. And I just wanted to ask you, with regards to that, right? Because there are going to be ICOs and dApps that are going to be built on Cardano. Would Cardano's team be providing a level of support from a legal standpoint, of course, and then naturally technical? There will be support as well. But what would be the ideal manner of let's say, for example, with all these regulations in place, how would you advise these ICOs to be compliant? Right? Obviously, integrity is a very big part, right? You have to have that strong vision, that mission and vision that you are really here to solve a bloody problem, and not here just because you want to drive a Lamborghini 2 to 3 years time, right? So this is what I see, and I think, Charles, you're the best person that can really answer my question. This is actually a burning question that I've always wanted to ask, and I just wanted to know if you were to start advising ICOs which eventually, by the way, also, which is second part, when are ICOs going to be built on your platform? Which is what the whole chat is asking at the moment, right? Because they kind of want a timeline, but you can answer that later. But I want you to answer the important question is, if ICOs were to be regulated, how would you kind of advise them? What do you think is the right procedure and steps to take, towards fundraising? Yeah.
Okay, so the great news is that after crackdowns happen, standards emerge, better expectations emerge, best practices emerge. So I wrote a paper a long time ago, back in 2015. Actually, it's 2014. It was called the Hoskinson Doctrine, where I just kind of outlined some of the things I imagine we need to do as a community for decentralized crowdfunding. And I felt that decentralized crowdfunding is just a great idea. It makes a lot of sense. When Kickstarter and Indiegogo came around, then we got Pillars of Eternity and we got Oculus and we got all this really cool stuff. And it created a completely new dimension. And it said, hey, we don't need to centralize capital markets and VC. We can decentralize that, but we need to put some additional protections and controls in. So the first thing that you asked is, when will ICOs come for Cardano? They'll come when we put those capabilities into the system. And then at that point, anybody can use them. So it's an open system. So my first philosophy is build open systems. So that's a double-edged sword. On one hand, it means you've made it easy and accessible for everyone. On the other hand, because it's easy and accessible for everyone, by definition, at least one person will run a scam and hurt people. Okay. So I personally avoid endorsing ICOs in general, unless it's something I deeply philosophically believe in. And if I do join a project and become an advisor of a project that's conducted an ICO, almost certainly I do it after the ICO is concluded and they have now capital, because it's a different question. It's not help you raise money. It's now a question of help you spend the money you've already raised wisely. And no one made an investment or a purchasing decision based on my participation. I'm just coming in as a value adder. for example. So the first thing that I would like to encourage people to do is I would like people to encourage to create standards for the raising of capital, for consumer protections, for the sale of tokens, and for the stages of this process. So let's take the entire VC stack, let's unwind it, let's look at each and every stage, and then let's create some specifications and standards for that. So we've created as a community a standard for asset representation. That's the RC20 standard. It's fairly reasonable. Our partner Runtime Verification created a formal spec for it that's machine understandable. We can do the exact same thing for refunds. We can do the exact same thing for creating closed markets that are only viable for accredited investors. We can do the same thing for vesting schedules for insiders. We can do the same thing for use of capital. Notice we're talking about constructing a treasury. So a treasury is kind of like an ICO in a certain respect. You're printing money out of thin air, you're putting it into a decentralized bank account, and then you're creating a system to decide where to send that money and who deserves to get that. Well, guess what? If you figured out that mechanic, you can say, okay, instead of inflation filling this decentralized pool of capital, we're going to use an ICO event to fill this pool of capital. That's what the DAO was attempting to do. So that's kind of the first level of it, is just build out capabilities and have great discussions. And we're not the only ones who think about this. There's Project Brooklyn at Consensus and a litany of other projects floating around that are basically having this discussion. Some of them are actually being driven by governments. For example, I sit on a panel in Barbados where we're having discussions about a sandbox for the entire country. There's people in Switzerland right now having discussions about asset classification and standards. So what is a utility token? What is a security token? And they're making proposals to FINMA for these types of regulation. So we've entered the age of conversation. There's going to be enforcement, and the enforcement will generate conversation about how to do it properly. The advantage we now have is we can preserve the decentralized elements of things, but now as a global basis, we can have best practices. And as a global basis, we can actually have standards that can emerge. And then retail investors are much better protected because they're now making decisions based upon standards as opposed to making decisions based upon gut feelings and intuition. So it's kind of like when ratings agencies came up and you have your pension money or your 401k money, and they said, hey, this is an A-rated thing or a B-rated thing. The problem with ratings is if they're not done properly, you can buy junk. But for the most part, ratings agencies probably do an okay job with some very notable exceptions like mortgage-backed securities and so forth. So my hope is to create some form of a rating system in that respect and some sort of community and market standards. Now, I can do that, meaning I can help create those standards and give them to the world for free to use. And they're decentralized and they're transparent and they're Darwinian in that they evolve so we can see what worked and what doesn't work. But what I won't do is I won't go and then use those things to run crowd sales for new protocols and things like that. More likely than not, I won't go down that road or endorse the people who go down that road. That's a different level of the system. And actually, that's why we have Emergo and IOHK. Emergo is a separate entity in the Cardano ecosystem that worries about dApps and protocols and ICOs and so forth. And they're building specialized talent and specialized people. I own nothing in Emergo. I have no financial connection to it. I have no control to it. It's a separate company led by Ken Kodama and a different group of people. And so they get to think about the actual application and the use. What I get to think about is stay principled and just worry about the science and the standards and the conversations and so forth. And then what's going to happen with all markets is we'll see successes and we'll see failures. The successes will inform us on how to do things better. Now, the advantage we have with cryptocurrencies is that we don't end up in a situation where stuff tends to centralize. That's good, because almost always that's what results in market failures and corruption, is we tend to optimize around an improper mean and we get very brittle. And when that becomes wrong, the whole thing shatters and falls apart. And the other advantage we have is that we're running the experiment at light speed. It's like super accelerated evolution. Evolution is a very slow process. It takes millions of years to get an extra tail. Here you can run evolution in a matter of seconds to minutes, hours, weeks, and so forth. It's kind of like this whole singularity thing where they say once you create an AI, the AI will get real smart real soon. Well, similarly, you have all these competing markets and standards, and the collapses happen much faster than they would otherwise, and they happen much more frequently, and it gives you an enormous amount of data on what not to do. This will be on the back of early investor money, unfortunately. but that is what it is. That's the nature of all these markets, and people are just going to have to learn and grow from that. Now, one caveat to this: the people say, I have my money and I have every right to do what I want to do. And that's true. As a libertarian, I believe that. But the vast majority of retail investors, I would argue, that are buying into ICOs are not buying on fundamentals or merit or a long-term affiliation and belief in the system. Ethereum was a bit different because of the way it was marketed and because of the relationship we had with the community and the people who tend to be involved. But the people who are buying now are saying, when do I get my token and when can I exit? I've seen Bob get 100x. I want to get 100x. So they are buying on a lie. They're basically saying that these are a collection of Ponzi schemes, and I think I'm early enough to the game that I can exit and make a big return. That's a very different thing. And there's a reason why we make these things illegal. And there's a reason why these things are tightly regulated otherwise, because that type of mentality and behavior has historically reoccurred in markets over and over again, from the boiler rooms of the past, to the unregulated markets and exchanges in the past. The other thing is,
it happens in the regulated markets as well, all the time. It's still happening right now. It's called the penny IPO. Stocks, right?
Yeah, look at the Facebook IPO. And so they kind of overvalued things a little bit, right?
Or how about the Snapchat? Or how about the Snapchat IPO?
Exactly. So these things historically happened, and they get much more exacerbated in unregulated markets, because in the unregulated markets you have insider trading, and you have board transitivity. In America, we've run this experiment before. We were one of the first to build the modern markets, and so we had, for example, industrialists sit on 50 different boards or 60 different boards. And they had first access to all this macroeconomic data that no one else did. So they knew when a collapse was coming days, weeks, or in some cases months before even the government would know. JP Morgan was a great example of that. And so they can invest accordingly, dump accordingly on the backs of the poor, walk away with a fortune, and then the whole market would collapse and they'd be fine in their palatal estate. Look up the Knickerbocker crisis, I think it was 1907. So very rightfully so, people set laws, standards, and other things and said, hey, you can't quite do these things. Now, are human beings perfect? No. Are laws perfect? No. Are regulations perfect? Almost certainly not. So that it hasn't worked out the way it was intended, and regulated examples are abound. Some people argue that Tesla is not a valid company. On one hand, they have a great product and they have a great CEO and they're executing on a great vision. On the other hand, they don't actually make money. They just keep issuing more stock. They do ICO after ICO. They do one season equity offering after another to capitalize the company to build out their vision, right? So they've moved from VCs footing the bill to retail investors footing the bill. And some people have concerns that that might not be viable. So that's a regulated entity if there ever was one. They're subject to Sarbanes-Oxley. The SEC is completely fine with these things, and people understand the risks that they're getting into. Is that good? Maybe. Is it bad? Maybe not. Depends on where you sit in your vision and so forth. And also, why are people buying the stock? Okay, so I don't have the answer to all of this. I'm a mathematician. I didn't study these things in college, and I've only been forced to think about them as a result of being in the space. And I don't speak for the world. I don't speak for you. I don't speak for everybody else. I just speak for myself and my own opinion. So I think the only way I can be meaningful and have impact is just stick to the things I'm really good at, which is I'm good at coordinating scientists. I'm good at coordinating engineers. And let's get standards. Let's talk to people. Let's write a lot of stuff down. And let's create a lot of conversations. And then let's try to steer these conversations in a productive way so that we can measure outcomes. And then we can say, well, what is a good outcome versus a bad outcome? A good outcome for me is Ethereum. People put in some money. The Ethereum founders went and built a great product. And Ethereum, regardless of whether you love it or hate it, you can't deny that it's a legitimate protocol. It's a legitimate venture, and it will never be worth less than what people put in. It was successful from a very objective viewpoint. So let's try to have successes like that. And when we do have failures, and there's plenty of failures to look at, let's try to figure out why that failure occurred. Was it a governance crisis? Was it just too ambitious? We should have been funded in stages. Were people unrealistic about things? Were there foundational conceptual problems and so forth? And then use those as learning experiences to kind of tune the parameters in a way that we can try again a little bit better of capacity. Sorry to be a Debbie Downer.
No. I think the most important is that the people who are watching this understand that, because I've been talking about it for one of the longest times, and I think to be able to hear it from of one of the initial founders of Ethereum. I mean, literally, it just puts everything to rest, right? So I think it's all about us also gradually understanding what is to come. No one can have a crystal ball and predict what's going to happen in the future. And I think what you're doing is that you already mentioned it. You're just doing what needs to be done in the space. And of course, if regulators were to come knocking at your door, you're just sharing with them what needs to be done, and as much as possible as an expert in what you do, right? And then from them, they have to figure out, because honestly, governments don't even know what to do with this space either, right? They're still figuring out they're just poking in the dark. They're really not very sure. For example, I think with regards to taxation on cryptocurrencies, I mean, that's a whole like a lot of problems in itself. But anyway, not going to go into that. I think what I want to ask is that, what are the projects that you see are going to form your ecosystem, and why you think these current projects that are going to be potentially built on Cardano going to strengthen the overall ecosystem?
It's a good question. So, okay, so you can kind of break it into a few buckets. So one bucket is what's going to drive demand of ADA, and what's going to onboard people, bring people into your ecosystem. So there, I think games are very powerful. CryptoKitties is just fabulous for Ethereum. At first it kind of is the acid test of your blockchain. In the gaming world, we had Crisis, and we said, can your PC run Crisis? And now we say, can your blockchain run CryptoKitties? So we now have a mark of quality for your level of performance.
Yes.
But actually, if you look at these games like World of Warcraft or EVE Online or Diablo or something like that, the thing that they have in common is that people spend hundreds, if not thousands of hours in them. They earn gold, they earn items, and those have real value. And to say that we can unlock that value and allow people to trade that on markets, which they're already doing. You can go to eBay, you can go to other places and buy stuff from these games. You're just doing it out of band and there's no consumer protections in it. I think that's a killer application, is to allow people to form virtual economies that now allow you to actually monetize the things that you do, whether that be music, whether that be digital gold in a game, whether that be a sword that you've earned from killing Diablo, whatever that is. It's nice to be able to monetize that and actually trade those on markets. And then also it brings a whole new group of people into your space, and they don't even know that they're using your protocol. They don't care about it. They say, I don't know anything about Cardano. I'm an EVE Online guy. I'm World of Warcraft. It's just like VoIP. You go to everyday people, you say, hey, how's that VoIP working for you? You say, I don't know anything about VoIP. So you ever use Facebook Messenger? So, oh yeah. It's like, okay, you're using a VoIP protocol, right?
Voice over IP.
Yeah, exactly.
Yeah.
So basically, that's like one grouping. This is the games and experiences that you don't really think is a cryptocurrency, but a token at the end of the rainbow and a blockchain at the end of the rainbow and markets at the end of the rainbow really would add a lot of value. If we just did that, we got that done right. That's worth something the magnitude of the tens to hundreds of billions of dollars if it becomes a de facto protocol for it. So I think it's worthwhile for us to invest some time and effort in that. The second is identity and reputation. Now, this is a human right more so than anything else. So historically, no matter if you're looking at today, all the way back to the time of the Mongols, all the way back to the Huns, all the way back to the Visigoths, throughout history, raiders have come around, they've invaded nations, they've caused problems, and what's the first thing they do? They throw all the scrolls and property records, and they burn the libraries down. Oh no, you know what that means? It means all your records are lost. Who owns what where? Is Bob a good person? Is Bob a bad person? So the modern day equivalent of that is like Syria. You have a stable government, not a very good one, but a stable one, be replaced by a fundamentalist evil government. And that evil government has an agenda, so they change history and they go and destroy everything they can get their hands on. At some point, peace will come. And when peace comes, people come home. The millions of refugees that have fled will come back. And when they come back, there's somebody else living on their land. We saw this post-World War II after the Holocaust. We saw this in Afghanistan, after the Taliban had been kicked out. It's no different. It's always happens. And then that's my land. And the person living on your land says, no, it's mine. Where's your records? And they don't exist. They've been destroyed. So property rights, identity, and reputation, they need to be disintermediated, decoupled from governments. Because governments can lie, they can fail, they can become co-opted, they can have political agendas that are against you as a person. And so as a consequence, you can't trust the government as the property rights holder, as the identity kernel. You have to say, well, they were only chosen because they were the only ones we could choose. But now blockchain technology gives us a better way of handling this. Once you have that, then everybody in the entire world is on equal footing in terms of e-commerce and in terms of credit. The big issue of why countries stay poor is that person in the country, regardless of what they do, doesn't have a way of proving to people outside of the country who have money that they are a good actor, that they are a good person. Like, for example, if I was to hire somebody in Ghana and they show up with a local bachelor's degree in computer science, I'd have to do very extensive due diligence and rigorous analysis of that person to know if they're a real candidate or not. It's not because I think that they're stupid or that they're a bad person. It's just that I have no idea if the Ghanaian universities are on par with Harvard and Oxford and MIT and the rest of these guys. They don't have that brand and that reputation that we've taken for granted growing up in stable, great jurisdictions. So that candidate is already at an enormous disadvantage, no fault of his own, just because he lost the geographic lottery. He was born in the wrong country. So if you have a stable identity and reputation system, then you can start talking about universal credentials. You can start talking about universal attestation of creditworthiness and these types of things. Then that person, when they ask for a loan, I can look at them in the same respect as the person in America or the person in Europe or the person in Japan or Singapore. The same for if they ask for a job, the same for if I want to do business with them. For example, what if that person says, I'll be a contractor, I'll write you a bunch of code. Send me, some money up front. How would you trust that guy? Well, if they have a reputation to lose that is more expensive than the value of the money you're sending, just like eBay, you trust that person, even though you've never personally met that person. So I think that's the second bucket, is the identity bucket, the property rights bucket, and the reputation bucket. They're all interconnected to each other, but the definition of success there is you have something that can be used in the scale of billions of people. It's auditable, it's immutable, and it actually allows you to form micro identity and micro reputation within markets. Because reputation is not a universal metric. It's not something like, I'm going to trust you both to take care of my kid, and I'm going to trust you to get a loan. I may trust some people to lend money to them, but not trust them with my children. So we don't have a notion of a reputation metric that covers all of those. So they're situational to the things that you want to do. The point is that you should make it easy for people to be able to prove that they are good at raising kids, or they are good with your money, or they are good at managing risk, whatever that might be, or they are smart. And they have the same access to that as everybody else. So we're going to be investing quite heavily into a series of experiments and a series of trials and error to try to get that right. I think that we have an obligation to build better markets in general, financial markets in particular. And what's really exciting to me is that we live in a siloed asset world that's very inefficient. It has lots of middlemen. Settlement times are way too long. And there's just frankly a lot of predatory behavior by these institutions where they always seem to win. And we always have these too big to fail banks, and these investment banks basically get deals at the expense of everybody else. They're regulated, but they're still just jackasses. They're bad people. So what we ought to do is say, can we find better ways of creating assets and having assets trade and get to a universal marketplace? So right now you look at stock differently than you look at a bond, differently than you look at a currency, differently than you look at a commodity, and these live in different buckets. They live in different ecosystems. Well, there's no reason why they should. There's no reason why you shouldn't be able to go from airline miles to gold, gold to work units to dollars, whatever that might be. So the fact that we now can create a universal marketplace where you can represent all of these things and they can trade as first-class citizens to each other is a really exciting opportunity, because it means that you'll be able to create more and more exotic asset classes, things that you'd never imagine, which are actually quite useful. For example, in Kenya, they use M-Pesa, they use cell phone minutes for a currency. So wouldn't it be so cool if those cell phone minutes actually could touch a global economy, and now those people can trade that for the purpose of Forex? That'd be great. I have a lot of airline miles. I travel a lot. I'd love to be able to buy coffee with them, so it'd be cool if we could free up these assets. And to be frank, there are literally trillions of dollars, if not tens of trillions of dollars worth of wealth that is locked up because there's no way to represent it and there's no way to trade it in a marketplace. So the third bucket that we're really interested in is asset representation in markets in general, and finding better ways of unlocking these assets and better ways of actually trading and selling these things in decentralized exchanges. Now, the power of smart contracts is that you can build into the assets themselves terms and conditions and consumer protections, which means the biggest single cost in all these financial markets, which is usually regulation, can actually be substantially mitigated. You can still have all the outcomes that the regulators seek, but at the same time, now you have a global book. Now you have a global marketplace that has regulation built in, thanks to smart contracts. And everybody knows upfront what they're getting themselves into, regardless of where they happen to be from. So we're really keen and interested to explore that area. And the regulation conversation we had previously gave some insight into some of the things we're going to do there. But the good news is these markets actually aren't that hard to build. There's already tons of great ideas from Kyber on down about how to build a decentralized marketplace. And asset representation, I think, is near done as a project. And it's just a matter then of finding more and more creative ways of doing assets. So one example of what we'll probably do within the next 2 years is we're really interested in tokenization of natural resources. So we're entering Africa this year. One of the things I'd love to do by 2020, maybe even 2019, would be to take a natural resource, whether it be natural gas or gold or oil, and instead of saying, go do a consignment deal, a concession deal with Rio Tinto or China and get paid 2 cents on the dollar for that aluminum or 2 cents on the dollar for those diamonds or that oil, and they do all the development work, pre-sell, do an ICO to sell the resource into market. And those tokens represent a percentage of the total yield of that mine or of that well or whatever it might be. And you'll now make 50 cents or 60 cents on the dollar. And now speculators, sophisticated speculators, can buy that, get a big discount, but you're not seeing that enormous arbitrage, which is what China's currently getting because of geopolitical pull. So now you have a way of direct selling things for project finance, which is much more fair to the people who are selling. They're getting 20 or 30 times more money, but it's still a great deal for people in the markets who are willing to take that risk. And we're able to do this at a very small scale and all the way up to a very large national scale. I would love to be able to conduct experiments like that. And I think that's going to be something fun, and we'll definitely encourage that development. So we'll build out that infrastructure and through third parties, try to see if these things work or fail.
That sounds more like your treasury. That sounds more your treasury phase, right? Which is pretty much further out on the roadmap.
Yeah, 2019, 2020, as I would say, these types of things, right? Yeah, and all of these things take time. So, right now we're in the foundation stage of things where we're building the core infrastructure and the core protocols and learning how to do this really well. And then as we grow larger, and one of the advantages we have is we're deeply embedded in all the universities. We can go and have a conversation in Oxford anytime we want. I was just at Harvard and I was just at MIT. I mean, I literally can talk to anybody in the world that I want to talk to. And in many cases, we can literally collaborate with anybody in the world that we want to collaborate with. A great example would be that, about 6 months ago, we said, yeah, guys, we probably should be resistant to quantum computers. And I'll tell you how I knew that. So this is a brief aside, but it gives you an example of what we can do. I was at Crypto. It's one of the largest cryptography conferences in the world. And I sat for one of the keynote presentations at Crypto 17. And one of the keynotes was Google's head of their quantum computing group. And I'd read all the pop culture articles about quantum computers and so forth, but this is the guy whose day job is to build one. And he works at Google and he's done all this really cool stuff there. So, I watched this 45-minute presentation. Then I pull him aside after the presentation. I say, hey, let's have lunch. He said, okay. So we sit down, have a nice conversation. And the conclusion of that is that they're making some good progress, man. And quantum computers are probably a real thing. And we should really think carefully about how are we going to solve this? So then we said, oh God, we have to figure out how are we going to harden Cardano to quantum computers. Now, I could go read a bunch of books on it, and I can pretend I'm real bright, and maybe I can talk to my cryptographers and convince them to do the same. But quantum crypto and post-quantum crypto schemes, man, that's hard. It's a very, very specialized, very hard field. It's like learning how to be a surgeon. It's like, it takes many years and a lot of effort and cross-training in physics and other things like that to really understand what's going on, okay? Well, because we are connected to the academy, guess what I did? I said, fuck it, let's just go hire the guys who know what the hell they're doing. So we made a deal with Peter Schwab and a deal with Alexander Russell. And we said, hey, I'd like you guys to write a paper to basically harden Ouroboros, the heart of our system, against quantum computers. And that's a direct research relationship. Well, normal can't go
That's very
talk.
smart.
Normal people can't go talk to Peter and Alex. That's a
Yeah.
relationship thing, and it takes credibility and trust, and they have to know, what are you actually trying to do here? Are you, am I actually going to get a paper? What's the scam? So you have to build some credibility and memory within the academic world, but we can do that. And so it's the same for economics. When we go about building a value stable currency, it's not going to be me sitting in a dark basement trying to figure that out. I'm just going to go to Oxford and talk to the guys there and say, all right, well, who wants it? And we'll put a team of people together who have decades of experience and really prestigious prizes and so forth and know what the hell they're doing. And we can be very focused about it, and we can get it done in the fastest possible time and have the best chance of success. Doesn't guarantee success, but it sure as heck means that we have a better chance at it. And it's the same for building these marketplaces, and the same for these token sales and so forth. We are in a position where we can be in the room with the guy or the gal who happens to be the expert. So let's go talk to them, have that conversation. Even if we fail, the fact that somebody of that prominence is thinking about it encourages graduate students, entrepreneurs, and other people to also think about it and to compete with us. And someone will get it right. And the magic is that this is an open source movement. It's an intellectual property free movement for the most part. So if one of my competitors comes up with a better idea than me, I can take that idea and bring it into my stack. And now I have it for free. Just like the smart contract paradigm, there's some things we're borrowing for Cardano from Ethereum.
Yes.
So thanks, Vitalik. But he freely did that. And just like we with Ethereum shamelessly borrowed a lot of stuff from Bitcoin, some ideas, concepts there and so forth. And that's the magic of the space, is that you can, if you start the right conversations and you're in the right rooms, then you get enough really bright people thinking about this. And then you've created a financial incentive or a reputational incentive to solve the problem. And eventually it finds a way to get solved. And then it's just a matter of execution. Who can bring it to market? Who can execute faster and better? And that's a slightly different question, but that's okay. That eventually gets done. And then we all benefit from it.
Now, with regards to your take now, because ETC was previously mining, right? So it's proof of work. Right now, you have transitioned your transition Cardano to proof of stake. So right now, with regards to this consensus algorithm, which is probably the last question that we have for the stream, why did you pick proof of stake? As in, do you really feel that going forward, this is the way that it's going to be? And in terms of, which is second part of the question, right? The decentralized nature of all these nodes going forward, because we have protocols like so-called, we have other consensus algorithms like Hashgraph that are blockless, and IOTA has the Tangle network. So I'm just wondering, like as in someone who is non-techie, do we need the blockchain, or now we are saying that Hashgraph is blockless? How does that actually work? Or is this, it may be a separate question, Charles, but maybe help me to figure out these two things.
Right.
Yeah.
I got asked this question this morning in a separate interview, and basically my answer there was, the game of consensus is not a new game. It's not like Satoshi Nakamoto just figured out how to build a distributed system, and he was the first person to do that. This is a game that we've been playing as an academic community and as an engineering community since the 1970s. So it's very old. It's been going on for a long time. So the minute that we started networking computers together, we started asking questions about, can computers have the same clock? Can they agree on time? Can computers share a state? Can they share a database? And so forth. And then there in the question, you start asking about faults. So what happens when the clock is wrong on one of the computers? What happens when the database collapses on one of the computers? What happens when somebody is actively dishonest? That's called a Byzantine actor, the Byzantine general's problem. Okay, so there's a great science to this entire space, and it's one that predates the existence of Bitcoin. The contribution that Bitcoin did is that Bitcoin came up with the idea of a dynamic quorum, in that it wanted to be permissionless. So generally, what we were focused on as distributed systems people was they would say, we'll fix a set of people, a quorum, and then we're going to try to prove some properties about that quorum, like it's resistant up to a third of the Byzantine actors, or a half, or something like that. And we created possibility theorems and all these other things. But we didn't have a big and detailed conversation about how do you pick that quorum, and is that quorum static or dynamic, and so forth. This was always a little bit shaky, because we didn't need to think about that, because generally you knew the actors ahead of time. They're my servers, or they're my servers with Amazon servers, or they're these groupings of banks and they're trying to share some state amongst each other. But that was understood. What Satoshi did is say, I don't know the quorum. I don't know the people there. So I want to create a system where anybody can participate, and there's a game that everybody plays, and the economic incentive is aligned to be honest with that game. Okay, when that happened, people got real excited about it, and they said, wow, this is pretty novel. It's pretty cool. It's not, to be fair, it's not the only time it occurred, but it was the first time it occurred that that really got popularized in the general public. Then what happened is we moved away from computer science, we moved away from facts, and we moved to religion. And what's happened is the cult has formed around proof of work, where people say that proof of work is the only way to build a blockchain. It's the only secure way. It's the only trustless way. It's the only asynchronous way. They get real passionate about this, to the extent that they don't even want to have a conversation about what other systems can be secure. Can proof of stake be secure or not? So I try to approach this without any preconceived notions. So what our chief scientist did is he said, let's not even think about a consensus algorithm. Let's set that aside, and let's think about what is the goal? What are we trying to achieve? What is a ledger? And what makes a ledger secure? Okay, let's start there, because that's the goal. That's what we're trying to do. Then let's ask, does proof of work actually do this or not? And what properties does it have? So that was the GKL15 paper that he published with Juan Garay and Nico Leonardis. And basically he said, okay, this is a ledger and proof of work creates this. Great. Now we have something to talk about. We have, a standard. We have some view of this. Then we can ask a question of what other consensus algorithms, whether it be Byzantine agreement or DPoS or RPoS, can produce that in addition to proof of work. So the Ouroboros work was to show that proof of stake can create the same level of security as proof of work. Proof of stake can create the same level of security as proof of work. That's what we did. Now here's where the conversation gets cultish or conflated. When I say that, they say, oh, that can't be, proof of stake is not secure, blah, 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 provably secure, yada, yada, yada. What they're really saying is that the trade-offs that you have to give up, the things that you have to give up to get that same level of security, result in something not being a cryptocurrency. Either it's too centralized, or you're being controlled by the wrong people, et cetera, et cetera, et cetera. The really smart people, what they're really saying is the trade-offs are unacceptable. The trade-offs we give up for proof of work are livable. We're okay with wasting more power than the entire country of Singapore, and we're okay wasting more power than the whole country of Ecuador to sustain this system. That's okay for some reason. That trade-off's fine. We're okay with exogenous consensus and people having subsidized power have an unfair advantage over everybody else, and people who have patented ASICs and dedicated supply chains, that's okay. And we're okay with mining centralization. Fine. They live with those trade-offs. And they don't even believe that the trade-offs for proof of stake are reasonable in any way, shape, or form, that they're just never going to achieve anything. They say it's ruled by plutocracy, and it'll always centralize, and yada, yada, yada. Okay. So we are a neutral company. We don't care if it's proof of work or proof of stake, and we frankly feel that there are things you can do in the proof of work space to make it quite interesting. You can make proof of work useful. You can actually decentralize proof of work so that you don't have mining pools. You can speed up proof of work considerably. In fact, today a protocol called Phantom came out, which is a construction based upon Ghost and Spectre, which will make proof of work much faster. Okay, so there's all kinds of things you can do in the proof of work space to make it a better consensus algorithm than the one that Nakamoto gave us. Similarly, with proof of stake, you have all kinds of things you can do there. You can prove that you can bootstrap from Genesis and have that same property that Bitcoin has with the longest chain selection rule. You can fine-tune your selection process of the people who get elected to run things to include things other than how much stake they have. It can be importance. It can be metrics like network relay. There's all kinds of ways that you can select people for your committee. You can fine tune where you get your sources of randomness from, whether you want true randomness, like things from a beacon or things from a MPC algorithm, or bias randomness from a random oracle. Okay, great. You can tune all of these types of things, and then you can decide the sizes of your committee and how you do these. You can have compulsory committees, that's what DPoS does, or you can have dynamic committees, that's what we do. These are all just parameterizations. And every single one of those parameterizations means you're trusting people in a different way. You end up having a different network topology. But at the end of the day, what you are producing, assuming an honest majority, is the same thing, which is you have a ledger. That ledger is immutable. That ledger is time-stamped, it's auditable, and it's transparent and open for everybody. Okay? So just the question is, does my configuration of things give me resilience? And does my configuration of things incentivize an honest majority to create that ledger? And you ask those questions on both sides, both on the proof of work side and on the proof of stake side. And you have to decide the trade-off profile that you live with. I think this is a thing that most people don't get because they're not well trained, is that they don't understand there's no such thing as a free lunch. If somebody comes to you and says, I've invented some magic algorithm that's super duper performant, and you get a pony and you get a unicorn and you get all this and everything's magical, they're either stupid or they're actively trying to lie to you. It's not a situation where everybody in the whole academic world is incompetent and blind and they just don't understand cryptocurrencies. Cryptocurrencies are quite simple compared to a lot of the problems that they work on. It's that everything has a price. And if you want to maximize performance, almost certainly what you're doing is you're making your system brittle in certain respect. You're making it fragile against Byzantine actors or some other factor, or you're making your system more centralized or federated in a certain respect.
So what is the problem with Hashgraph? So what is the problem with Hashgraph? Because I think you would be better equipped to kind of deduce that, because we always hear all the fluff from Hashgraph, but we don't really know exactly what's the problem. Same thing as Tangle Network. We don't really know exactly how it functions or what the problem is. It just sounds awesome, right?
Right.
There's free. It's free. I really don't even know how. I think we also have some opinions about EOS as well. So, these are the things that we kind of want to deduce as well. Because to me, I find that, look, this network, you have to pay. Right? That's why I kind of accept the whole Bitcoin blockchain. I believe in gas, right? Because we are running on top of the internet already. Right. And if we're going to have these borderless functionalities that are, seamless and free and all that, it cannot be entirely free. So I'm just thinking, this zero, how the heck do you actually function? And, where does the
no notion of a free lunch.
It should not. Exactly. Someone has to pay, right? Someone has to pay, either at the initial stage where the VCs pay for the development of the technology, but eventually they will want to have an exit strategy. So how the heck can it be free?
No, but I'm just talking about operationally speaking.
Sure,
you have data use, you have CPU use, you have network use, and you have energy. And you say, oh, it's free, I'm not paying anything. It's like credit cards are the greatest example of that. Where you say, oh, I don't pay for credit card. I go and buy, and they don't charge me for that, but the merchant pays. So, and they say, well, that's fine. Well, the merchant builds that into his pricing. That's why when I go to a Chinese restaurant, they say you can't use a credit card unless you spend more than $15 or something like that, because there's a fee built into that, and they raise their prices accordingly. So I'm paying, I just don't appear to pay up front. Free healthcare is the same way. You live in Canada, you live anywhere else. So, oh, I get my healthcare for free. No, you don't. It's part of your taxes. It's prepaid. Maybe it's a more efficient way of doing things. That's a separate conversation, but it doesn't make it free. It always costs something. It's just going to have to come from somewhere. And as for transaction fees, if you don't charge them and you compensate people a different way, it's usually inflation, where you print money and give it to somebody who's doing something. So now you're paying on the back end instead of the front end. Now, in particular with things like Tangle and Hashgraph and in Phantom and all of these DAG-like structures, when you move away from a replicated system where somebody has a universal view of the system and consensus is well-defined and simple, to a system that's more exotic, meaning you have like this mesh of transactions or this mesh of blocks. Usually what the trade-off profile is that you don't see the whole network. You don't actually see the whole history. You can't. You only see a chunk of it. And if people act in a dishonest way, then it usually dramatically slows down throughput, because the only mitigation strategy you have is to do an alternative path of verification, which whatever performance you've gained by doing this mesh, you've lost. So you gain enormous speed on the front end, but the back end is usually constrained by fragility, meaning that if there are Byzantine actors, they cause problems. Now, what I've made a habit of doing is if I don't fully understand a technology, I haven't really gotten deep into it, I try not to comment on it. Like, for example, we never did a thorough peer review into EOS until Dan Larimer forced our hand. We said, that's Dan's thing. I don't think it's a wise idea to raise $1 billion, but I won't comment on it. Then he wrote a hideous article where he said we plagiarized him and our algorithms don't work and he's a genius and we're idiots and our peer review is wrong. So then we were forced to actually have a discussion and say that certain claims are just unreasonable. Like, it takes 300 milliseconds to send a signal all around the entire world. If you go through normal transmission media, it's just a measured thing you can do. So then to say that you can transmit a block throughout an entire cryptocurrency network, assume it's confirmed, everybody has it, and then move on to the next block with that kind of propagation delay at the speed of light is just insane. It's just not possible. It's not how gossip networks work in any respect, even multi-stage networks. You're going to have basically your edge nodes perpetually be out of sync. So there's things that were being said about performance and transmission which are factually untrue. They just cannot be done. And their answer is, well, we'll prove it to you. We have the code, and you eggheads don't know what you're doing. It's like, okay, well, I guess the whole field of information theory ought to be thrown away. Now, as for Hashgraph and Tangle, these things, it's entirely possible they've come up with a better way of representing things where the trade-off profile is better for cryptocurrencies than blockchain structures. In which case, this is actually an order of magnitude or two improvement over the way we've been doing things. It's just like when you discover a new algorithm to replace a previously inefficient algorithm, like your best case with quadratic, and then you discover a linear one. You're accomplishing the same goal. You've just found a better way of accomplishing that goal that's much faster. And I'll concede that they may actually have something. But the thing is that you have to be really smart about this and very systematic about it. And we're not at the stage of our project where we're actually taking these things seriously because they're unnecessary. There are other factors which constrain throughput than just raw TPS. You can have 100,000 transactions per second, but you got to store them somewhere. You got to move them somewhere. So you're still constrained on the network side and constrained on the disk storage side. So it's like, until you solve that, you don't have a holistic system. You have a bottleneck. You're never going to get actual throughput in that world, which gives us the luxury to be more academic about this. We've actually hired some dedicated people who do nothing but study DAGs and think about DAGs. And what we're now doing with the next stage of Ouroboros is exploring what is our philosophy in that respect. And is there anything from Hashgraph or IOTA or so forth that is reasonable to borrow? Unfortunately, some of this stuff is patented. I believe Hashgraph actually has patents, which is quite unfortunate. I think it's against the ethos of the entire space because we can no longer borrow. So basically, they got it right or wrong, and almost always that results in a barrier to adoption. For example, there was a great signature scheme in the quantum space called Ntrue, which had some good properties, but no one used it because it was patented. It's the same for a lot of other a lot of other signature schemes, especially some elliptic schemes that were patented. So I think that's counterproductive. It's the same for Algorand. Algorand is a really cool idea for consensus from Silvio Macaulay, but he's patented the hell out of the thing. And every time I have dinner with Silvio, I say, hey, you got to lighten up on that. He's, oh, no, this is the way we're going to do things. So we're going to study this stuff. We'll look into it. We'll have a more informed opinion about how to approach these particular types of problems. To be honest, we're already using DAGs since Bitcoin began. People don't understand that when you look at a UTXO accounting model, that's a directed acyclic graph. In fact, there's a paper out of IBM research that showed how to do that. So you have a blockchain embedded within it has a DAG. So it may make sense to cut out the middleman and just represent the whole thing as a DAG, and that's what Tangle attempts to do. And so there's some wisdom behind that. What I don't understand is the trade-off profile. I don't know what I'm giving up for that. Am I giving up availability? Am I more fragile against Byzantine actions? Do I have a problem with confirmation of transactions where I never truly know if this is actually legitimate or not? Is the double spend successful in certain cases? And I have to understand that. And we haven't done enough foundational research for it, because to be honest with you, regardless if you're doing Tangle or you're doing Hashgraph, you can use Ouroboros. Our goal is to confirm something. And so we're figuring out, where do we get the randomness from? Where do we get the people? And how do we pay that? That block that we're generating, that thing we're confirming, could just as well be a DAG as opposed to a blockchain. So our algorithm could be dropped in. And so we were focusing on that. And then the next stage is to shard it. And the next stage is to adopt a high throughput algorithm and understand what we're doing. Now, if you want to know papers that I respect and I think have made some great contributions that we have read and we think have good approaches, Omniledger is one. Another one is called Thunderella. And I really
how
love
do you spell that? How do you spell it?
Thundera, Thunderella, or something like that. It's from
Okay.
Raphael Pass and I think Elaine Chi out of Cornell Tech. And then Omni Ledger is just like it sounds, OMNI Ledger.
OMNI. Okay.
Yeah, yeah, and both of these papers are written in academia. They show very good trade-off profiles, and they have very high throughput, like in the tens of thousands of transactions, given certain assumptions. And I think that's a valid way forward. The line of thought with sharding proof of work in terms of turning it into a DAG, that one's the oldest. It started with Ghost, and that was in 2013. We adopted it for Ethereum. Then it went to Spectre. That was about 2015, 2016, and then it went to Phantom, which just came out today. That line of thought from Avi Zohar and Yonatan Somlopinski is quite good as well. And it's got a lot of history and rigor behind it. And these papers are peer reviewed. So you at least know that, serious people have taken a look at them and thought about them pretty deeply. And they exist in the right academic environments to get good feedback for these types of things. So I take those papers very seriously. The other ones is like, well, you got to earn some respect. Take your paper, submit it for a conference like Eurocrypt or Crypto or Oakland, and then at the very least, we kind of know what the conversation looks like and that the obvious questions have been asked. The fact that they haven't done that doesn't mean that it's wrong. For example, in mathematics, we have a very famous problem called the ABC conjecture. And there's a mathematician claiming he solves it, and he's a very credible mathematician. His name is Shinichi, and he's based at Kyoto University. So a lot of people believe he probably has solved the problem, but the problem is he won't go and talk about it. He just published the proofs and put them online, and they're really, really hard. They're like several hundred pages of stuff, and it would take you 1 or 2 years of dedicated study to kind of understand if this is right or wrong. And because he hasn't structured the conversation in a way that's conductive with people verifying the claim, most people don't bother to invest the time. And this is the problem with Hashgraph and Tangle and others, is they haven't been structured in a way to have a productive conversation about whether they're correct and the trade-off profile is reasonable and so forth. Instead, what they've done is what Shinichi has done, which is just publish it, put it online, and say, I'm right. Now, they could be, and there could be some great gems in there, but it means that now I have to personally invest a heck of a lot of time into unwinding what they've done and systematically walking my way through it to understand what they've done is reasonable or not. And if it's a game of numbers, 9 times out of 10, it's wrong because there's something in it that they've missed because they didn't follow the right process. And that 1 time out of 10, they got it right. This is one of the reasons Bitcoin wasn't taken seriously in academia, because Satoshi followed this approach. He published his paper, he released this thing. Even the creator of proof of work, Adam Back, didn't reply to Satoshi's emails. He didn't take him seriously. So yeah, in hindsight, I bet he wish he did. And in hindsight, I bet he wish he replied to that. Satoshi reaches out to him. It's like, who the fuck is this guy? I don't have time for this, right? Because you get used to getting all these crank things. If you're a mathematician, you study things like Goldbach conjecture, Riemann hypothesis, you will get undergraduates, grad students, and amateurs all the time emailing you, say, I've proven the Goldbach conjecture. I've done it. I've solved this, or I've solved the Riemann hypothesis. And they send you some 100-page babbling paper, and it doesn't look right, and maybe they're right, but you don't want to take the time. It's too much work. You don't have enough time in life for this. So we have a moral obligation, though, because of the commercial nature of these products that have been deployed, to do investigate them. We did this for Dash with their treasury model, and we saw that there was some good there and there was some bad there, and we published a paper on it. And we'll do the exact same for OmniLedger, for Hashgraph and Tangle, and we'll find some good and some bad. The other thing is that the space has created a counter incentive for me, though, to look into it. Because if I find problems that are real problems, like what MIT did with their write-up of IOTA, you don't get a nice conversation out of that. You have people who call you a liar, they call you a horrible human being, and all these things. If for no
because they
reason,
want to protect their own interests, right?
Exactly.
At the end of the day, yeah.
Exactly. So that's why
it may not be, they're not very open to criticism, despite the fact that, actually you're helping them along, but they don't take it that way because it's a business at the end of the day, especially now that cryptocurrency markets are already close to 500B. It becomes very serious. It's no longer about helping each other go along. It's about me and you now. You're critiquing my consensus algorithm or and I think this is the part where we all, even as investors, we all have our own camps, right? We are like, I'm a Cardano fan, but in all honesty, like, we have to kind of help this space grow together if we really want to be able to see the bigger picture. And that's how I kind of see it. Yeah. So yeah, it's just that kind of space. So you're actually saying that the moment that you do research, it's just that whether or not you feel that is it right to actually release, right? And that kind of restricts the
Right.
whole learning curve. And I'm sure that you saying this, you're also very open to critique about Cardano as well, right?
Well,
In
yeah,
that
we
sense.
already are. We have
Yeah.
third-party code audit, and that'll be released this month. And we have peer review for all of our core protocols. So we've already gone to crypto. We've been accepted to Eurocrypt. We've gone to ACNS. We've gone to Financial Crypto. And by the way, that is a brutal process. You have a committee, and that committee basically does everything in their power to say you're wrong and rejects your paper. And they ask very tough, sometimes unfair questions, sometimes fair questions, and you have to write a rebuttal. And you go over and over and over again until they reject the paper or accept the paper, and often they reject. For example, crypto and Eurocrypt, the acceptance rates range about 15% to 20% amongst papers submitted by experts. So these are people who already have PhDs, they're at Harvard, they're at good universities, they submit, and sometimes they don't even get in, 4 times out of 5. So we're open to that. And if people have legitimate criticisms about what we're doing, we will engage those people and have great conversations with them. And we talk to our competitors all the time. For example, in the academic proof of stake world, there's 2 competitors to Ouroboros. There's Snow White and there's Algorand. And these are done by real credible people. Algorand was created by the guy who won a Nobel Prize in computer science. His name is Silvio Macaulay, and he's a tenured professor at MIT. And the dude invented half of modern cryptography. If you like your zero knowledge proof, well, you can thank him for it. He invented it. If you like your multi-party computation, he was a foundational mind in that field. So this is a real serious dude, and yet we still have differences of opinion about how to build a proper consensus algorithm. And we talk to him and we have very productive conversations. We don't always agree, but they go in positive directions, and in some cases have a potential for collaboration. It's the same for Snow White. It's out of Cornell Tech by Raphael Pass and Elaine Shih and Phil Dian. And Bentov was on the original paper. And again, it's easy to talk to Raphael and have a conversation with him, if anything, at a conference, and say, hey, what do you like about what we've done? Or what do you like of that? And that's a great example of collaboration. But what we can't do is engage with people that are missing foundational knowledge, and they don't understand trade-offs, and they don't understand impossibility theorems, they don't understand computer science at a high enough level. And then they just basically come to you and say, I've solved everything. They haven't. And you tell them, well, here's where you're wrong. And they say, no, you're against me and you're biased, or you don't understand my brilliance. And then they turn it into a politics of personal destruction thing. It's trust me over him. They create a cult of personality, and then they raise a lot of money on it. And then their investors have every incentive to tear people down. When MIT criticized IOTA, for them to say there's a conflict of interest was the worst possible response that you could have. I don't comment on them a lot, but I will comment on this because this is an academic body, the DCI. Maybe they're wrong. And how you say they're wrong is you point out where they're wrong in a very explicit way, in a friendly way, and then you invite them to meet with you and have a conversation. You go to the lab, you have them come to you, whatever, and then you try to have a proper debate. Aubrey de Grey is a great example of this. Aubrey is a big guy in the life extension business. He's trying to figure out a way to make human beings live forever. And he's written all these books on it and so forth. And MIT criticized him. They said, you're a bunch of fluff. And he said, oh, well, let's talk about that. And they tried to refute his book, and they had a big argument, big debate, but it was done in a very well thought out, very structured way, to an extent where MIT admitted that maybe they were a bit too harsh. So it's okay to have differences of opinion, and it's okay to have people not agree with you completely or have different approaches. What is not okay is to say the reason why people are disagreeing with me is because they're bad, horrible human beings, or they're misguided, yada, 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 and only I have the source of truth, and only I can solve everything, and everything I've come up with is right and everybody else is wrong. You will go to the road to hell that way. You go to groupthink, more religion than science at that point, and you're almost certainly going to lose your money. You're almost certainly going to fail, because even if you have it all solved, what happens when you have to solve the next problem? No one wants to work with you because you're an asshole. It's just a bad way of going about things.
So my last and final question. I know I have a lot of last and final questions, but there's just so many things after you release all this information. I always have a lot of last questions. So right now, if is Cardano's platform ready in terms of for companies to start building on it?
Not quite. We're at the point of where we've released a cryptocurrency. So we're like Bitcoin in that respect. So payment system, and we have a consensus algorithm. And the first priority was just to launch, to get on exchanges, to learn how that works, to get people who've bought ADA back during the crowd sale to redeem into the system, and get a wallet out there and learn the good, the bad, and the ugly, and so forth. Also, because Ouroboros is a completely new consensus algorithm, you're bloody insane if you release it all together and just say, okay, here's Ouroboros, have fun. You are the test. It's like, okay, so you have to do these things in stages. So the first major stage post Byron is Shelley, and Shelley's all about global decentralization and then all the hookups that we need to start doing smart contracts. So Shelley's coming soon. It'll come next few months, maybe June, maybe longer. Just depends on how long it takes us to reduce some technical debt and get ourselves into a good position for that. But at that point, basically, we could just go home and say, okay, we've built a better Bitcoin and the system's awesome in every way and it's very secure. Or we could say, hey, now we need to match Ethereum. So we've conquered the first generation. Now the second generation is coming. So the next release after Shelley is called Goguen. And we can actually work on that in parallel because of the way we've structured our architecture. And our hope is to announce some form of a test net at some point soon. But then Goguen is basically about saying, how do we match all the capabilities of Ethereum and add new capabilities? And that's Yella and Plutus. And that's where companies can actually start building dApps, and they can build decentralized organizations and so forth. And then you have to wire our control layer with our settlement layer. And that'll happen sometime this year. So the majority of our work right now is just making sure that we clean up all the stuff that people aren't happy with. Like we'd like to paper wallets and multi-sig and ledger support and resolve the connecting to network issue that some people are having, create some enterprise APIs for exchanges so they have a better experience when they create our wallets, get throughput where it needs to be, get our data layer where it needs to be, and clean up the network stack a bit. It's like all this backlog of stuff that needs to be done as a consequence of learning, because it's completely new code. It's 70,000 lines of Haskell code. That's a lot. There's a lot going on here. Then after that's done, fully decentralize the system. That's Shelley. And then once full decentralization has occurred, then connect it to smart contracts. Once those are done, then pound for pound, I think we're the best cryptocurrency in the world. So you could look at Ethereum, you could look at Bitcoin, all these things, great, but it still doesn't mean we're third generation, and it still doesn't mean that we have succeeded in building something that can scale to billions of people. That's the next step. That's Volterra and future releases, where we add in sharding and we add in a decentralized database and all of these things, so that we can actually get about processing transactions on the scale of hundreds of thousands and millions and moving that much data. So we have technologies we're working on now, which won't come to completion until next year, such as RENA, that will enable that next generation. So you kind of stage everything. So, the research we're implementing now, we started as early as 2015 and 2016. And now we're just seeing it, work its way into our system. And we started research in 2017 and some research this year that won't be concluded until 2018's ended and 2019 begins. And then we'll start implementing it and bring it into the stack. So I really do believe it'll take until 2020 before we have a system that I would consider to be truly third generation. But it doesn't mean that it's not useful until then. You're going to have smart contracts this year, and we're going to have a lot of great features and functionality this year, and people should be able to begin making their assets and building interesting things just like they can on Ethereum with our system. And our hope is, if we've done our job right, pound for pound will be the most competitive, meaning that you'll have the largest selection of programming languages to use, it'll be the cheapest platform to use, and we feel that security will be really good. That trade-off profile will be right. And that'll also be very fast and have a high throughput. Just it's not quite something at the scale that can run with billions of people.
All right. Thank you so much, Charles, for taking this time to really explain the project and about the whole cryptocurrency space with us. That is all the time that we have today. Thank you so much, you guys, for watching. And thank you so much, Charles, for being part of this interview. All right. Thank you so much and take care.
Thank you so much. And I apologize for being late. Cheers.
No worries, Charles. Cheers. Take care and have a good day. See you guys.